Hey Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, I want to talk about all the green on the charts. As you can see, Sell, which we did point out in the last episode, just has continued to run wild. We also have Hex, making up some of those incredible losses that it's had over the past year. I mean, Hex, if you got into it in the last year, you've just been kind of wrecked, right? Just absolutely wrecked in the Hex community, but making up some of those grounds and a pretty good jump there as well. You do see, favorites like Sol and Matic and Near and Avax just continuing to go. Dot making an effort. FTM. We've got Adam, Rose, everyone joining in. SHIB, a giant 30% pump. Of course, we were looking for that, and it did eventually come forward. But additionally, we want to give a big shout out to the ADA community. ADA, the slow mover, the kind of mature guy in the room, right? Just slowly moving forward with Bitcoin and stocks. And so finally it decided to join the party, which is probably a good sign because if you're seeing those type of, more, slow mover coins, those more, kind of mature coins that kind of take a slow dance to the party, I mean, that's a good sign that things may be moving in the right direction. Of course, on the market watch schedule, we did have a 5-year inflation expectation put out by the University of Michigan. It did have a slight tick up, compared to the last measurement at 2.9. The current measurement is 3%. So that's not necessarily a good thing. That could imply that we have not reached peak inflation, and so that the Fed, it just puts a little bit more pressure on the Fed to increase interest rates down the line. I told you guys we have to keep abreast of these things. It's not going to be just clear, it's not going to be 100% clear what the Fed is going to do or how bad a recession is going to get. A lot of you guys like keep focusing on the recession, but right now, as I mentioned, until September, like really solidly into September, maybe even into quarter four of 2022, we're really going to be focusing on those inflation numbers. And then if a recession starts, getting rid of a bunch of jobs, right, then we'll pivot over to worrying about the recession, right? But right now, we still have to find out what the Fed is going to do because the market, wisely or foolishly, cough, cough, foolishly, is already pricing in the fact that it believes that the Fed will cut interest rates 3 times in 2023. Now, this is just a pure hubris. The market cannot know this, and that is a very dangerous thing for the market to be doing because if the Fed does end up increasing interest rates, this market could come crashing back down because they're counting their chickens before they're hatched. They're thinking there's going to be 3 interest rates cuts, not increases, not smaller increases, cuts before we've actually seen peak inflation. And when you see reports like the University of Michigan putting out, expectations for inflation to be higher than the previous report that they made, that's not a good sign, okay? So we're going to keep watching this. This is just one data point, but it is going to be important to keep watching this space. And as long as the market keeps acting with a little bit of irrational hubris, the interest rates and the inflation issue is back fully on the table. It should be top of mind. And while for a little while I was suggesting the recession should be top of mind, that was before the market started pricing in interest rates cuts. Okay, now that the market is doing something so foolish as pricing in interest rate cuts way in advance, way before there's evidence for that, this is going to become a big problem down the line if inflation is not, in fact, taken care of, and if the recession ends up being not as deep as people think. So if a recession is just kind of a shallow recession where most people, keep their jobs, and it's not like major layoffs like, in the 19, whatever 80s or 70s or whatever it was, when there was just massive layoffs all over the place. And if people are just keeping their jobs, then you're probably not going to have the deep recession that some people are counting on, and that means the recession is not going to take care of inflation for us. That means that the Fed will have to continue to increase rates. So again, we're going to keep watching this space. This information is important, and that's why I keep mentioning it. Of course, stocks did close in the green on Friday, and everything just is brightly lit green. Okay, so that was the go-ahead for Bitcoin to just go ahead and have a kind of a positive trades on the weekend. And as I mentioned 2 episodes ago, there's no reason for us to be bearish. You can see the quote in my episode 2 episodes ago. There's absolutely no reason for us to be bearish. Now, we did get some strange candles. We did get some pullbacks into the questionable levels. But as I mentioned, we had one last chance, and everything looked pretty bullish. So, of course, we are still seeing coins fire off, and one of them happens to be good old ADA, good old Cardano, right? So everybody loves to make fun of Cardano. Everyone loves to make fun of the ADA. Personally, I don't have any preference for this coin or not, but I do want to give a big congratulations to the Alpha fam, right? The Alpha Cardano fam, because look at this, man. We've reached our stretch goal, right? Cardano reached our stretch goal, and if you entered with us at these lows over here, at around 45 cents, right? This kind of area, then you have made a whopping 30%. And if you entered on us on the breakout of this oppressive diagonal, remember this battle? We have been following Cardano and ADA, and it has just been a battle. It has been a struggle to just defeat this diagonal. And once we finally defeated that diagonal, and I suggested to you guys, as long as we could hold that 50-cent area, you are going to see Cardano just blast off. And what did we do? We met our take profit zone a couple times here at the top of our range. Of course, the top of our range really was this diagonal before we were able to break through it cleanly, but it did give us a little bit of a sampler there where it did get to 55 cents before getting totally rejected. And again, it pushed through that kind of diagonal area before just getting slammed down and basically giving you a third chance, maybe fourth chance to enter at these just sweet levels here on this diagonal support. It used that diagonal support as it crawled up and was able to push through, having like poked a couple holes in that diagonal. It was able to push through, and sure enough, slow and steady wins the race, and we've got a nice 20%, victory over this Cardano chart since these entries over here, and a nice 30% gains since I originally suggested buying in at the lower 1/3 of this range, right? Now, the stretch goal area could possibly take us to 66 cents, that kind of area, or you could take your profits here if you would like. There might be some type of a retrace. We don't know how the market's going to go, but anyway, we did reach our stretch goal. We did actually tap the white line just perfectly, I think almost to the dollar, guys. So that was just a brilliant play by the Alpha fam. Good job. I mean, if you guys had missed out on some of those coins that had just pumped to high heaven, then getting in on one of these coins that hadn't pumped yet, these slow movers like Cardano, I mean, that's your best bet for making your money, right? I mean, you can't catch all of the front runners, all of the guys that just pop off, on the first day. So if you're a little bit more conservative, you take your time getting into these trades, then you can find some excellent setups. And I the reason I added Cardano, even though we were primarily trading, Kadena, is because whereas Kadena may have made like 60%, from our setup areas, right? So let's see, where were our buy and sell zones. We've just been buying and selling, a Kadena left and right, right? As we have moved up in this area, similar to Cardano. That was a whopping 60%, almost double what Cardano did. But Kadena popped off early, right? Look at this. It just had a massive pop off really early. And so, of course, not everybody could catch that type of a pop. And then once something pops like that, you might be afraid that you're chasing the pump. You're not 100% sure if you should be getting in at the middle of this range. So what are you going to do? You're going to look for coins that haven't popped off yet. And that's why I recommended something like ADA to the Alpha Fam, because guys, like, you don't have to chase the ones that have just popped off like crazy. You can search your list of coins and then find one that's still, in the lower 1/3 of its chart, right? This is where Kadena had already popped off at, but ADA was just kind of hanging down at these lows, and then you can try to get in, and in that lower 1/3 of whatever range you're looking at, and that's a much safer place to enter than if you're just chasing some pump, right? Like if you entered Cardano right now, that's actually a pretty dangerous proposition because now Cardano has finally, joined the group of coins that have popped off. And so, while that's a good sign for the market that maybe the whole market is moving forward now, even these slow movers, the thing is that you don't want to be chasing these pumps. You want to be trying to find these strategic entries. And I think if we pop over to SHIB, maybe we can take a look at what SHIB did. Yeah, see, look, look at this. I had even marked this out already. So SHIB had basically had the similar type of like slow moving formation, and then look, pow, all in like one candle, it just made this massive, 26% gain. And I'm actually pretty disappointed that I missed that because it looks like yeah, it looks like that all happened in the last basically 12 hours. Okay, so I missed that. I missed that move while I was sleeping, and I actually had the perfect setup in mind for it. Just, I missed it. But you don't want to chase these pumps. They're going to come back down, they're going to retrace. So just find ones that haven't pumped yet, right? That either have broken out of their range and are kind of like at support, kind of threatening to pump. Let's see if there's something else here. Let's see band, right? See band? Band has a very similar setup to SHIB. See this here? Let's look over here. Yeah, not much resistance on the left side of it. So, and you can see band has done this before, right? And so that suggests it can do it again. I mean, what would that be for its percentage? Maybe not 26%. Oh, okay, maybe 30%. So maybe I'm wrong. Maybe it is, maybe it does end up being like 20% or something. Okay, we have a little bit of a zone right here, right? We have a little bit of a wick stopping here and here. So let's just say that band goes for it. Then maybe you could expect like 15% up to 30%. And again, guys, like that's pretty much in line with what SHIB's doing. If I'm going over these altcoins because I think a lot of you guys are interested in altcoins these days. I really, really try to follow Bitcoin, but as Ethereum is leading this market, um, it's just become very complicated to try to predict how things are going to move. And so the timing of this market is really off. If we do look at Ethereum, we can see that it continues to just crawl up extremely bullishly. And if I was going to make a projection for Ethereum using its daily EMAs, okay, like I told you guys, I'm primarily an EMAs trader. I would be targeting this area around mid-November, right? Based upon its current trajectory, I think that Ethereum could just continue to pump and that sometime mid, maybe early, September, pardon me, September, that could be the point where Ethereum maxes out and this market could turn around. So what I'm looking at, whereas other guys are thinking about maybe new all-time highs, I'm not 100% convinced of that. I think Ethereum is probably going to chop around, basically max out in this area, and then it's probably going to do some type of retrace. Now, maybe this is going to be a bullish retrace and it kind of breaks out and goes up, or maybe it's going to be repressed and, maybe the market is going to continue to the downside, and that will be in line with that quarter three, quarter four, basically standoff we're going to have between inflation and the recession, where we're going to find out in quarter four 2022, and maybe at the latest quarter one 2023, we're going to find out which issue is more important, inflation, and do we have it under control, or do we not have it under control, or the recession, and are we starting to lose a lot of jobs, or are we keeping a lot of jobs? And so we have this kind of four corners, we have this kind of cube of major issues, at least for the US market, right? Where we have inflation, right, at the forefront, right? Inflation. And then we have recession, right? And these are in conflict, these two issues. Now, if we have high inflation, right, and high recession, that's going to be stagflation. If we have, which is extremely dangerous, is probably going to take us to new lows. Okay, guys, like if we have really hardcore stagflation, we're probably going to be taken to new lows in this market. This low right here may look like, child's play compared to the lows that we may see. We could see $400 Ethereum if we have a true stagflation environment. And if we have low inflation but high recession, then yeah, we probably do have a chance for an all-time high in the market. And the reason for that, it's kind of cynical, it's kind of creepy, but the market is going to love the bad news in the economy as long as it's not so bad that it actually is like a double whammy. If we get a double whammy in the recession, then they're going to have to reassess the price of stocks. And if stock prices get downgraded because of the recession, then that's actually going to limit us on the charts, right? So maybe we do like a double top on stocks or something like that, but probably we can't reach an all-time high. We could get a nice pump, but we couldn't necessarily reach an all-time high because what's going to happen is they're going to lower the price of stocks as they project that maybe these companies aren't going to have good earnings over the next couple years, right? That would happen if we have like a double whammy of the recession. So there's kind of like this hidden fifth option also. However, if it's just a recession, right? So it's kind of like it's a recession, right? And then but it's just a basic recession. And then we have very low inflation, like inflation is getting taken care of, then probably the stock market is going to do very well. Now, if we have low inflation, pardon me, I think I drew this one wrong here. This one should be down. Right, so if we have a low inflation and just a regular recession, then of course the stock market can move forward pretty well. But if we have low inflation and low recession, then of course we might also get a an all-time high. So this is of course the dream scenario that we have, because this means that the Fed can cut interest rates. This is actually an okay scenario, right? Where we have, this one right here. And then this is basically death, and also this double whammy on recession. That could be a very big problem. But yeah, we have this kind of matrix of different issues going on, and so this is going to be a critical moment. This September, mid-September, kind of like using the 200 and the 300 EMAs on the daily for Bitcoin, using them as support, and then basically getting trapped under this wedge here, basically using this 200 MA, 300 MA as kind of a resistance, then we're probably going to get trapped in this area. And depending upon the news in the markets, we're either going to get a squeeze to the upside or a squeeze to the downside as we enter this kind of daily setup. Just briefly, I want to check out what the weekly is looking like. And yeah, I mean, so that would also be a natural place for us to squeeze up to on the weekly, sort of like what we did here. We just kind of squeezed up to this area. And you can see the yellow line. We basically have like the same amount above as below. So, the amount below, we could also put the same amount above. And only if we have extremely good economic news or, great conditions from the Fed, even if there's a recession, then we could have a squeeze to the upside. If we have just surprise moves by the Fed, then we can get knocked down. Or if we have like a double whammy recession or stagflation, then we can get knocked down potentially very, very hard. Okay. So those are the kind of setups that I want you to think about. Since Ethereum is leading the way, basically, it is important to take a look at Ethereum's timeline and to understand what might happen in the context of Ethereum putting in these highs, as Ethereum might end up leading us to the downside as well, right? So let's go ahead and pop over to Bitcoin. Of course, Bitcoin has been just trapped in this wedge that I've been talking about for quite some time. And it looks like we're getting a little bit of a pump right now, but we did get a little bit of a setback earlier. And there's nothing wrong with this except that it is an ascending wedge, which does have a tendency to break to the downside, right? I mean, we could get something like this, which would be an amazing squeeze, right? Probably would end up being some type of a short squeeze. But if we do end up just breaking down, and violating this critical area that I had marked out, then basically we could be testing our lows, and then perhaps we go a bit later. But this setup on the daily is starting to look very good to me. Um, you know, we're seeing a lot of coins popping off, and I think it's because basically on the daily, we don't need to wait any longer. I mean, this thing is doing what it needs to do. I almost am reluctant to even call this a wedge. It's obvious that we are getting rejected from the top of it, but I don't think that we're necessarily going to break down from this wedge. I think that what's happening right now is that we're syncing up between the 24/7 exchanges and the CME professional exchanges. So right now we've done something different that we've never done before on any of these teardrop kind of wedge formations, right? What we're doing is we're actually holding our EMAs as support. And while we kind of did it up here, and so I'm a little bit reluctant to say that we're out of the woods yet on this formation that just has broken down time and time and time again, right? And we did break down from the teardrop, but look at this. We've made a price that's actually higher than the teardrop price, and in no case when we broke down before did we do that. We never made a higher price after breaking down from the teardrop. And so this is quite different, guys. And I think it's because, guys, like I've been mentioning, we're in the bottom 1/3 of this drop. And I told you, I have no idea whether we're at the top of the bottom 1/3 or we're at the bottom of the 1/3 of this retracement of crypto. But basically, if this was the bottom, then of course this thing's not going to break down again. That wouldn't make sense, right? But if we're the top, of the bottom 1/3, then maybe we have another leg down to go. And we could make projections into this area, we could make projections down here, and I still believe that these areas are held open. They're basically like sitting in reserve. in case we have stagflation, or in case we have a double whammy recession, or in case the Fed surprises us with these huge interest rates increases when the market is pricing in 3 interest rates cuts. So what's going to happen is that we are just going to dump to hell if any of those things happen. And really, the only good play that we have is if recession has peaked, which sounds a bit questionable to me. And, if the recession is just a very light and we don't end up really losing a bunch of jobs or anything like that, moms don't struggle to feed their kids, people aren't being thrown out in the streets, that kind of thing. If that stuff doesn't happen, and if we've reached peak inflation, then guys, we're going to have a new bull market. Okay, and I'm preparing you for that because we're going to have a new bull market. Now, we've had a bull run. I mentioned this in the last episode, went over it quite in detail, but we're going to have a new bull market if we've reached peak inflation, plus if we only have a mild recession. Mild recession being that not a ton of jobs are lost. Okay, so yeah, let's find out. I mean, if the stagflation case, which a lot of these, especially let's face it, conservative like talk radio hosts are talking about, if they think Armageddon is coming to the economy, then if stagflation, if that double whammy recession, like that Great Depression that they're all kind of like worried about, right? All these very negative, bearish, you know, just full on bear market, like bring it to us, economist out there, like that they're kind of thinking about. If that happens, then we are going to take our leg down, and if the Fed decides that it doesn't want pardon me, inflation to be sticky, if it wants to bring down the interest rate to like a normal level, not just like an elevated level that we can live with, but to a normal level, then the Fed is going to continue to increase rates, and that could knock us down another level or two. Okay, I just want you to be aware of the risk. We don't control, right, this channel. Nobody on YouTube, nobody on Twitter, none of your friends, none of these talk radio hosts, right? None of them control what the Federal Reserve is going to do. None of them control the banking situation in China. None of them control the war in Russia. All of these things, right? None of them control what Europe is going to do or what Latin America is going to do, okay? Like all of these things work together to create that macro environment. And right now, it's incredibly complex. Nobody can give you a straight answer. And so, what the market is trying to do right now, the market is trying to take advantage of these kind of like the easy situation that it has right now until it has to face some hard realities. Coming in September and perhaps into, all the way into quarter one, 2023, when the grim realities of the situation are going to be very, very clear. So, if it ends up being not as grim as people think, then maybe we can double bottom, something like that. If it ends up being worse than people think, maybe we have another leg down. If it ends up being better than people think, then maybe we get kind of a higher low and we just continue to go, right? But nobody knows yet, so just trade the charts for right now. Sorry to emphasize that so much, but a lot of people don't understand what's happening in the world. They think that you can just predict this stuff straight up, but really we have to be prepared for the worst case situations, and we have to be prepared for the best case situations. So this channel has been buying basically at the bottom of the market, okay? We called to start entering the market towards the bottom, and if you've been following our plays, right? Absolutely, absolutely. If this ended up being the bottom of the market, you bought the Pico bottom of the market with us. And guys, like, we were not super bearish. We were not trying to scare you out of buying. We were actually trying to convince you to buy at the bottom of the market, okay? If that ends up coming into fruition, and this would have been like some, I mean, there's some type of a bragging rights in that, right? To simultaneously be aware of the very dire risk on the charts, but at the same time, taking calculated entries. We didn't enter over here when nobody knew. We didn't enter here when nobody knew. In fact, we even waited for some extra confirmation, and we very carefully, right? The Alpha Fam waited very carefully to decide to make these type of recommendations before we got into the market. And if this ends up being the bottom of the market, we nailed the Pico bottom, and you guys can be very, very proud of that. But at the same time, I want to mention that all of the information that I presented in Macro Mondays, in those macro analyses, those things are still real. Okay, there's a reason why they're so scary and why so many people may have been scared out of the market to even join the market. It's because those things are very real risk, and we do not have macro confirmation of an uptrend. We only have a macro downtrend, but we also have a bull market, okay? We also, pardon me, we also have a bull run, right? Bitcoin has ran 40% up, stocks have run 20% up, so we have a bull run. And even though we don't have confirmation of a bull market, right? The longer term macro, we haven't got confirmation on, why miss out on a bull run? So that's what we're trying to do here. We're trying to juggle those two kind of competing thoughts, and I was not recommending you to get in, at these upper levels. I was recommending you to get in at these lower levels. And if we take a look, right, if we go over here and we take a look at those the alpha origin channels, right? I mean, we haven't really taken a look at those in a while now. Man, it's actually been so long. It looks like I've just like put so many things on this chart. We have just gone over, we have gone over so many. Look at all these different categories of stuff that we have looked at. Man, I need to really clean up this stuff. But yeah, look at this. My goodness. Fractal, CME gaps, the banana. Yeah, so there's our alpha origin channels. I think I got to put it on log. Let me just move this one to the top here. We can keep track of where we are. I mean, look at this, guys. Right? Boom. Right to my green zone, right? Right to my green zone. People are going to tell you this or that line is the most important line in crypto. Blah blah blah, guys. Look, these alpha origin channels I made, thinking about the needs of the community, thinking about where these charts actually have traumatic breakdowns from every single time, traumatic breakdowns from my yellow line here, kind of the warning, right, the line in the sand. Do not cross this yellow line. Get out before then. And we all got out, right? We all got out before this purple line. And of course, the yellow line was basically the last time, you could make your decision to leave. And then after we started hitting this white line, we basically entered capitulation. I mentioned anything under that white line is highly likely to be capitulation. Anything above there could probably be like a fake out or a little trick, right? Like kind of like this area right here. But most likely we were definitely in capitulation if we were below the white line. And then the red line, it's just, if we ever had the opportunity to buy below the red line, what did I mention? Just fill up your bags, guys, if we ever are able to break below the red line, not financial advice for you. I'm just talking to myself, okay? Because basically I'm trying to become a better trader through this stuff. But some of my friends are joining along the way. And I just want to keep this picture open because this picture has been drawn out for months and months and months since the top of the market. And this has just been a shining guide, right? This has just been a shining light for you guys as we have creeped down in this market. And again, it's just been the ultimate warning. You know, a lot of people were saying DCA in when we were making this curve in this purple zone, and I was telling you guys, like those guys are crazy. They are going to wreck you, right? Because we are entering a macro cycle correction, and macro cycle corrections do not end in this purple zone. Of course, we're looking at stocks, and we're seeing a super cycle correction, which could end up bringing us to this green and gray zone, but stocks ended up bottoming out, at least temporarily. We don't know if they're going to continue on their cycle down, but stocks have at least bottomed out temporarily, are now making a dramatic push right now. And so that has just given us incredible relief. If this market can pump up back to the yellow line, maybe even into this purple line, but at least if we get up to this white to yellow line, then if stocks do dump again, guess what? We can make actually another bottom on this red line, or maybe even have like a little bit of a dip into this green area, sort of like what we did before. And I think that the crypto market may be trying to plan for this, maybe trying to get up into these areas the best that it can, and then if stocks take another leg down, then at least we're gonna be pumped up so that if we drop down, maybe this is probably the worst that could happen, right? The crypto market is trying to prepare itself for another stock crash. And from the crypto market perspective, a pump would be the safest thing that could happen in the crypto market to keep us from going under. Because a lot of these institutions, a lot of these cryptos, right, they depend on certain valuations. If you break certain valuations, then the whole market can topple like just the dominoes, right, like one after another. And we've seen that with like Voyager and Luna, and some of these other things that have just collapsed, right? Some of those stable coins, the algorithmic stable coins, they depend on certain things being certain prices, and if those things collapse, then the whole house of cards can come down. And so this market really does want to pump. It needs to get its prices up. It needs to just build in a little bit of a buffer area in case stocks come back down in 2023. If stocks come back down at Q4 2022 or into 2023, then what could happen is that crypto is going to have this little buffer that it built up, right, to come back down and then maybe stick its toes in this green area again and then work its way back above the red line as soon as possible, however long it takes. Doesn't have to be a V-shaped recovery. It could take a long time if it ends up being really bad, if 2023 ends up being really bad. But if 2023 ends up being really good, then maybe we just have our next bull market, right? And it's that simple, guys. It's that simple. So you guys remember, no matter how bearish my macro Monday analyses were, right? Because there just is just a lot of crap going on in this world, right? It's not an easy world that we're living in right now. There are a lot of very dangerous economic factors at play. There are threats of World War III on the table legitimately from two fronts, from China and Russia. And that is no joke, right? That is absolutely no joke. You want 9 to 12 month savings in your bank account as soon as you can get it. This crypto is not going to save your butt. If there is something that really hits the fan, you are going to want to have 9 to 12 month savings. And if we have a bull market, we've had a bull run, but if we have a bull market, then you're going to want to make a goal of getting 9 to 12 months savings, or as many months as you can, right? Preferably a minimum of 6 months, because we don't know what this world has in store for us. And so, as bearish as all of that is, we have to be open minded to buying in these juicy areas, right, that I've had marked out here for the entire time that I've constructed these alpha origin channels, because this is your guide, right? This is the guide to basically what has happened in the past. If something similar could happen in the future, then that's what then we can use this as some type of guiding light going forward. Now, the past doesn't have to dictate the future, so you can throw this out the window if, World War III strikes up, or if, we enter into some stock super cycle, just a dramatic downturn, then what could happen is that we just like go like this, and it could be whiplash, right? It could be absolute whiplash for a lot of people, for a lot of the bulls. And so, just to be aware, just to be aware that we still are in a macro downtrend. And so, take your profits, guys. Like, always be selling. Take your profits, put food on your table. Don't just hold coins. The coins aren't going to be loyal to you, right? That money in the bank is what's going to feed your family if something like if the stuff really hits the fan, right, in 2023, or if any of these weird war situations really end up happening, you're going to want to have something in the bank, okay? I mean, I don't want to be too dark about that, but we have to deal with reality. And so that's why I'm sharing with you those dark realities, but at the same time, I still can see a value zone, right? I can see a value zone, when I see it. And so yeah, that was your value zone, guys. I don't know if you guys took advantage of it or not, but there it is, and we're still very close to it. So if we have a pump, if we have some type of mean reversion on the charts, which could take us into these areas, right? It could take us to 28,000. It could take us to 33,000. It could even take us up to 50,000, guys. Like, I'm not lying. Like, this stuff is possible. This could just be a macro mean reversion, and then we could come back down later. Okay, like that's how charts work. That charts do this stuff. Okay, like I'm not kidding around. Like the charts do this stuff. So don't be close-minded to the pump. Don't be close-minded to value areas. And if we drop again and get in this area again, right? You should you should say thank you and buy in on those areas. If we drop below, you should fill your bags because probably the next wave up is just going to be incredible, right? Don't ignore the alpha origin channels. Again, not financial advice. I'm just kind of talking to myself here, but you see how it's working out so far, okay? So, not to pat my own back or anything, but this was a great call. This is a brilliant call. And hey, we at the Alpha fam over here, like we took advantage of it, and it's just been gravy. Let's see, guys. I want to probably just check up on Kadena really quick because we do have a lot of the Kadena family with us, and it's just doing its thing. It's just doing its thing. We originally had our stretch goal for Kadena down here, right? Our stretch goal area used to be down here. We actually moved it up, right? Because we just believe in this asset. It can definitely pump to the $3 range. It could pump all the way up here. Um, there's no reason why it couldn't actually get up to this area. It's just we've got some wicks here, right? We've got some wicks right here. I don't want to be too greedy, but we could definitely extend it up here, right? We've got this zone. Man, Man, that would be just a that would just be a lovely, brilliant play, wouldn't it? Uh, let's see. We basically had our yeah, it's just very complex, right? It's very complex for Kadena. So maybe I don't want a zone that's too big, right? I want something reasonable. So let's just keep it as it is, right? Just keep this stretch goal area up here. And if we can hit into this zone, right? Maybe take a little bit of a profit there, maybe a little bit of a pullback. We already kind of hit this 89 on the daily, so we are just getting repressed under the 89. See how the weekly is doing. Oh yeah, yeah, the weekly is just resetting. So yeah, definitely, Yeah, this is a good area to target. We do have the 20 MA kind of bearing down on us on the weekly, so targeting this area first, that's not it's not a bad idea. It's targeting this kind of 270-ish area, 275-ish as perhaps the most that we could see without getting kind of a smackdown. And then maybe stretching that to $3, and then eventually maybe that 330 to 350, right? Kind of up here, just get where you see all of these EMAs, right? Just gonna get into some kind of resistant area here. We're gonna have some pressure bearing down on us. Eventually, we're probably gonna get a pretty solid retrace. Kadena has been holding up pretty well so far, and it pumped a lot, guys. Like 60% was no joke. We actually ended up getting 65%, and the thing itself pumped like 70%. So, I mean, yeah, I'm not catching these little wicks, okay, guys? Like it's too rich for my blood. I'm gonna catch the major candles as they start moving up, right? I don't want to catch them while they're falling down. I want to catch them as they're moving up and have confirmed buy pressure. That's why my boxes are a little bit higher, right? So yeah, we got like a 65% on Kadena, and again, like I had this buyback area down here. We do have this kind of ultimate low. I'm gonna keep it in this area. Uh, yeah, this thing is losing momentum and it could pull back. So, you know, just kind of keep this area as a potential pullback area. We don't know. But otherwise, I would expect Kadena to probably make its way up to you know, just say 260 to 270. And then if it can push through there, then 230, to 26 to 2, pardon me, 330 to 350, right, is possible, right? Possible. Let's see, Zilliqa. How's Zilliqa doing? Zilliqa's just completing the Cheshire Cat smile over here, just slowly moving up. It does look like it's getting a little bit of a squeeze on it here on the daily, so that's pretty cool. Maybe we could consider that our stretch goal zone here, this blue box of a nice 20% might be possible. So, yep, look for that. And if there could be a pullback here, that would be reasonable. Down to 40.044 could be really reasonable. But otherwise, I'd expect it to start reaching this 57 area. All right, guys, that's you're going to be your alpha for the day. Let's just see what Bitcoin's doing just really quickly. Just still retracing just a little bit. So nothing too special there. Ethereum hitting 2000 on the nose. So at kind of a psychological level, it does like to pull back on some of these rounder numbers, like 1,000, 1,500, 2,000, at least historically. So if there's a little bit of a pullback before the next pump, don't be too surprised. 2,000 is a pretty big psychological number, but you do see a little bit of softening here. But I don't think that's going to stop it from keep going. I think it's going to reach my target area. Sorry, I'm on log. Um, I do think it's going to reach this target area up here around 2,000 to $3,000. Get some of this resistance up here, right? And probably sell off before it hits this area around 3,000, right? All right, guys, that's your alpha for the day. Stay safe and happy trading.